bring in Helene Becker. She's Cowen Senior Research Analyst. And Helene, I have to say, I was looking for a flight over the weekend and was really surprised how much more it costs than where things were just a few months ago. When you listen to these capacity cuts that are going into effect because of a number of shortages, what does that ultimately mean from a cost perspective?
Well, thanks for the question. Costs are going up and fares are going up. That's the bottom line. Not only are jet fuel costs going up, New York Harbor is over $7 a gallon, and it's the highest in the country. Everywhere else in the country, it's about $3.50 a gallon. And obviously, or maybe not so obvious, but JetBlue gets a significant percentage of its jet fuel in this market. 80% of their flights or thereabouts touch New York and Boston. So they're here, they're being affected, specifically them. But we also have an issue with pilots and not only pilots, but an overall labor shortage. Almost any airline not named American, Delta, or United is losing pilots. And the attrition rate that we've heard ranges from a low of high single digits to as much as 25% for some of the smallest airlines. And that is putting pressure on route networks, and it's causing airlines to have to cut back in order to deliver a reliable product to the consumer.
Helene, it's Brian Chung here. So having said that, it sounds like the outlook is not going to improve anytime soon on the availability of cheaper fares, but also avoiding a cancellation of your flight. So when do these pressures alleviate, in your view?
Well, thanks for the question, Brian. So here's what we're hoping. We're hoping that the schedule reductions will enable the industry to deliver a product that's reliable. The summer months are always difficult because of pop-up thunderstorms, and that's what hurts schedule reliability more than almost anything else. And then second to that, I guess I'll put different variants of the coronavirus that cause not only us to get sick, but crew members to get sick, and that causes some unreliability. But our thought is that on the labor side itself, especially with respect to pilots, we are in a multi-year shortage of pilots for now, and we think it's going to last to the end of at least till the middle or end of this decade. We just don't have enough to replace those retiring. We estimate that between the passenger airlines and the freight airlines, including FedEx, UPS, Amazon Air, we probably need to hire between 7,000 and 8,000 pilots a year for at least the next 4 to 5 years. And there aren't that many people who are qualified to be a commercial airline pilot. And so this shortage of pilots is going to last for a long time, and it's a limitation on growth. And then the other issue, I'm sorry, go ahead.
Well, what's the other issue?
Oh, the other issue is capacity availability, getting aircraft. Boeing is behind deliveries on 787s. They've had issues with the 737 MAX. And then you have the Airbus A320neos that are behind schedule on deliveries too. So not only do you have a shortage of labor, but you have a shortage of aircraft as well.
So Helene, really quickly, we're talking about this just a few months out from one of the busiest travel months of the year. We've heard so much about Americans wanting to go out and travel again because of what's played out over the last few years. What does it ultimately mean for those travel plans if we're hearing about airlines cutting back on capacity months before that?
Well, two things. The first issue is going to be rising airfares. We think airfares are going up on average about 7% a month for the next 3 or 4 months. And then, of course, on the other side is the consumer, with not only airfares going up, but everything is going up. We have this huge inflationary problem in the United States right now with gasoline at the pump going up, with their food inflation and so on, rent and so on. We're really worried about demand destruction as we get through the summer. So maybe July and August will have a really good summer. And then we'll start to see that impact, the higher fares impact demand as we go into the fall.
All right, Helene Becker, Cowen Senior Research Analyst, thanks so much for the outlook. We'll be hunting for hopefully cheaper fares soon. Thanks so much.
I'm joined by Ben Armstrong, Bitboy Crypto founder. Good to have you back, Ben. So Ben, in terms of the attendance this year at this big event and what you got out of the experience, how would you describe it?
Well, the attendance was very high. Supposedly, the Miami Beach Convention Center could hold up to 15,000 people. It certainly didn't seem like it was at capacity at all times, but maybe if you factor in how many people were going through the weekend, there might have been upwards of 15,000 people there. The estimate set as me is 30,000 people were going to be coming down to the conference. It just kind of like doing several of these big conferences. I'll let you know, a lot of people go down for the city for the after parties, and they don't even necessarily, go to the actual event itself. But I think it was very upgraded over last year. I go back to 2 conferences ago to 2019, Bitcoin 2019. Of course, we had the COVID year of 2020 where there wasn't one. And I can tell you this conference has came, miles and miles and miles away. It's the largest crypto conference we have today. And, there's definitely a lot of excitement. There were some big announcements, some a little lackluster, but, definitely an event worth attending if you're in Bitcoin or crypto.
And what were the biggest announcements that stood out for you?
Yeah, so the biggest announcement, there were really 2. One that came out that there are, of course, last year El Salvador was announced it was going to be accepting Bitcoin as legal tender. This year we have, the potential of possibly Honduras. We have the potential of, a city off of Portugal, possibly, and then Mexico actually considering. We didn't get that really big boom announcement like there is a giant country accepting Bitcoin as legal tender at this point, but those were maybe some preemptive announcements of some things to come. But the big thing was that now NCR, which is the world's biggest point of sale system, they work with, I think, Bed Bath & Beyond, Walgreens, McDonald's, Ted's Montana Grill, tons of other companies, that they're actually going to be integrating with the Lightning Network so that using your Cash App in a Lightning wallet, which is like a layer 2 to Bitcoin, you'll be able to spend Bitcoin at, several different locations you couldn't before. And it's a different network. It's not the standard card network, which the retailers lose 3% on all of those sales. Is a much lower fee, less than 1% that they would be losing. So I think to me, like, it was a little lackluster because I think you have to get the retail side, the stores themselves to really push this narrative that, hey, we can give you a discount if you use this network or something like that. I think we're still dealing with a motivation problem because it's a couple extra steps to actually spend your Bitcoin, or you can actually spend US dollars via the Cash App using the Bitcoin Lightning Network as well. But it's a few extra steps to get people to do it. And I feel like, people are going to still opt for card because it's easier.
And it's interesting because obviously when Bitcoin first came about, it was considered the currency, but then it's obviously shifted now, and you see more people using it as a long-term investment. So then how now does this point of sale use, how does that perhaps either hurt or help Bitcoin and crypto's growth overall?
This is a great question, and I don't think there's a great answer to it. So you had Michael Saylor who came on stage with Cathie Wood, and as he left the stage, he said, don't ever sell your Bitcoin. And of course, the crowd goes wild, clapping and all this stuff. And then you have Jack Mallers who comes up and makes this point of sale announcement. This is basically like, hey, here's a new way for you to spend your Bitcoin, which is the equivalent of selling it. And the crowd goes wild. And, there's a lot of hero worship in the world of crypto. And I think people have to think critically. Once again, the only way that this actually helps is from the retail side to motivate customers or users to use another network so they save money. You're right. Bitcoin to me has become digital gold. It's not something that you want to sell. It's an asset you want to accumulate more of. And that's why I also think when you come to countries accepting crypto or Bitcoin as legal tender specifically, like why would we want a third world country to accept Bitcoin as legal tender, meaning that the people that live in that country that are already living, lives in poverty, that they're actually spending an appreciating asset? It doesn't really make sense. I do think it's time for the Bitcoin maximalists to move away from this argument of let's have it as a currency and everybody spend it, and let's accept it for what it is at this point, which is an appreciating asset that you want to gain more over time.
And I want to talk turning points. I mean, we saw with Bitcoin, some people say, look, I mean, obviously Bitcoin down today, it's currently under 40,000. Some people are saying it's going to hit 30,000. Cathie Wood, as you mentioned there, she's predicting Bitcoin could hit 1 million by 2030. And then, of course, you have the Ethereum merge that everyone has been waiting for. If you could just quickly give us your expectations in terms of the biggest turning points for Bitcoin and Ethereum.
Well, for me, the biggest turning point right now is going to be this ETH merge over the summer. So traditionally what we see is a Bitcoin 4-year cycle based on what we call the Bitcoin halving, where the block rewards are cut in half. Basically, the production of Bitcoin is cut in half every 4 years. This leads to a price surge for about a year and a half, and then a tremendous price drop. Right now, we're right in the thick of where we should be in the middle of a bear market, but Bitcoin is held. We haven't seen new lows since last summer. So to me, I think the only chance that we break out of this 4-year cycle and that we do see Bitcoin hit all-time highs again, maybe by the end of this year, beginning of next year, is for Ethereum to finally take its seat at the top of the market and to lead the market. I ultimately believe Ethereum will pass Bitcoin in market cap. I don't even think it's a question, just a matter of when. So with this ETH merge, with inflation of ETH going from like 4.3%, dropping 90% down to 0.4% per year, I think this is a tremendous moment in crypto history. And this is going to be the moment that is going to determine, can ETH take its seat and lead the market? Or will we still be slaves and dependent on Bitcoin to move the market? And if that's the case, then buckle in. The next year might be kind of rough as we lead up into the 2024 halving, which should occur sometime March or April in 2024.
Jay Stein, who is the CEO of Dream Hotel Group, joins us now as part of our America Back in Business series, sponsored by Straight Talk Wireless. Great to have you here with us today, Jay. First and foremost, just to set the stage for us, where does the business currently stand in comparison to pre-pandemic levels?
Much better. Hands down, much better. Different parts of the country, different successes. We fared pretty well in Miami throughout this pandemic. LA's bounced back very strong. Nashville has been pretty strong throughout most of it. New York City, where we have a number of properties, took the biggest hit for us. And I would say we're probably about 70% back to normal levels, so still a ways to go.
Jay, Dave Briggs here. How do you compare those major cities like New York or Miami compared with the medium markets where you guys have hotels? Are you seeing different types of return from pre-pandemic levels?
Yeah, still seeing a lot of strength in the leisure market. The transient, corporate transient market still hasn't come back to the levels that we're expected to see, but leisure's been extra strong, so it's been making up for some of that weaker demand in the corporate transient business. But certainly different parts of the country have been affected differently, as I mentioned earlier.
You're opening 3 new hotels worldwide this year. The locations, what went into that decision? Are you seeing consumers opt for more of these kind of locations that are a little bit more nature-based or experiential-based? And what really kind of drives that decision-making from your side as well in offering those experiences?
Yeah, so we saw that even before the pandemic. We started working on the Chatwell Lodge, which is kind of a wilderness lodge in upstate New York, maybe 90 miles from Manhattan. And guests are just looking to get away from the difficult weeks that they have, their cell phones, just to get back to nature a little bit. We're also doing an eco resort in the wilderness area of Belgium, where Belgium and France meet. And then the third property you mentioned that's certainly in a main city in Doha, in Qatar, and it'll open up towards the end of the year with the World Cup being in Qatar later this year.
What makes markets, Sam, like Louisville, Oklahoma City, Memphis, San Antonio, attractive in particular?
Yeah, so we, us being a lifestyle hotel company and always being known to be on the coasts, New York and LA, Miami, we recently started looking at Middle America, and we certainly see the opportunities there. There are cities with many times over 1 million people and got a desire to go to great restaurants, to stay in great hotels, or to have their friends and business friends when they come to the city stay in fun places. So it was just a natural. We saw the success, how we could do it out on the coast. We did Nashville, I don't know, we're 3 years now. We've been open. The hotel's been extremely successful. So Louisville, right up the road. In fact, the same owner that did the property with us in Nashville, he's the one building the property up in Louisville. So we're in San Antonio. We're in development there, in Dallas, Memphis, Cleveland, Atlanta. So a lot of opportunities in Middle America for great lifestyle hotels.
In terms of the workforce and the team members that you have to make these experiences really embody the full fruition of what you had anticipated and were wanting to deliver to your clients in those experiences as well. You know, we already know that the broader sector is just trying to get people to show up to work even after being hired. And so what changes have you had to make in your own workforce experience to ensure that you are retaining, but also acquiring new talent and making sure that it's an experience that they want to be a part of as well?
Yeah, it's been very tough, no doubt. There's a change in the world. I'm not sure how long it's going to go on for, but as you heard before, jobs are offered, people don't show up on the first day. We're experiencing all that. It's difficult opening up our restaurants and bars 7 days a week. We've had to cut back some hours of operation due to that. But we're also, trying to understand the new mindset of this employee and offering other benefits that we haven't offered in the past, and sign-on bonuses, being more flexible with schedules, just to find a way to make it work for them.
Tight labor market, one of the many challenges of the industry today. Jay Stein, Dream Hotel Group CEO. Appreciate your time today, sir. Thank you.
The state's legislature is debating a bill that would cut down a 40-hour work week to just 32 hours. That's bringing the sponsor of that bill. We've got Cristina Garcia, California State Assembly member. We've also got our very own Dani Romero joining in on the conversation. It is great to talk to you today. Walk me through the thesis first. Why is a 4-day work week the answer?
As we have seen with the Great Resignation, over 47 million employees have left their jobs for better opportunities. And as we are transitioning back, employees are making it clear that returning to normal or what we had before is not good enough. And they want better benefits as far as free time and flexibility to do more of what they love and have better mental and emotional health out there. And so this is the time to have this discussion with individuals. Companies are already experimenting with this, and they're seeing better productivity. They're not seeing labor shortages. They're not seeing attrition. And so we have examples. This is the moment to have this discussion. Employees are making it clear that they want better.
Assembly member, it's Dani here. So I was taking a look at your bill, and it's for non-union companies. What about the union side? Would that take another bill to implement and help those workers? What is the idea on that?
The reality is that this bill is the floor and not the ceiling, and our unions often have fought for better opportunities and better benefits for employees. So I would gather that as they are negotiating contracts, this will be on the table and part of their negotiations out there. And so they have been great advocates here in the state for our employees. And if this becomes a reality, I imagine that this would just be the floor and not the ceiling for their negotiations.
I imagine you've gotten a lot of pushback from the business community, the California Chamber of Commerce coming out and saying the overtime costs that would be associated with this kind of shift would be untenable. How do you respond to that?
Well, I would say that the situation they're in right now is untenable. Over 60% of employers are dealing with a labor shortage that has led to lots of losses, them having to close earlier or not open at all. And so they could continue to complain about this, or they could learn to adapt, which is what employees are telling them in mass numbers out there. Companies who are adapting already are doing better. There are companies out there who are doing this. It's not all of the business community that has said no to this. This is the time to adapt, and everyone's going to be better off. People's bottom lines are going to be better off if we adapt sooner than later.
And Assembly member, it's Dani here again. So how does this differ from the federal bill that was proposed by California Representative Mark Takano?
So big fan of the bill that he introduced, but as we're seeing the gridlock in Washington, California has always prided itself with leading. And so we do take inspiration from Mr. Takano's work, but we are just starting someplace and inviting stakeholders to the table to figure out those details of how this works. There's a lot of similarities there with Mr. Takano's bill. But, I think for us, this is just a starting point. We welcome stakeholders. That have been some good questions about how this would work. And we're early in the process. We just started the legislative year. We are year round. And so we do take inspiration from Mr. Takano's bill, not identical. And as the bill moves, we'll see where we land.
Hey, it's Brian Chung here. I want to ask about how this impacts the tech space, which obviously is very prevalent in your state. How do you think this impacts them? Because obviously, you know, assessing hours and the enforcement of this might be easier for those lower wage kind of hourly workers. But for those that are salaried, how would you enforce what is often the case in the tech space, which is, you know, working way more than 40 hours a week?
So this bill is limited to just hourly employees, but a lot of the tech industry is already pushing for 4 days a week and are trying to make it work out there. And they're actually leading and innovating here in the state of California as well. And so we welcome that discussion. We just put down a flag knowing that this will not cover everybody, but if we start someplace, we expect this to trickle down to all of our other employees as well and all of our other businesses.
And Assembly Member, just to wrap it up here, it's Dani again. I wanted to shift gears a little bit and talk about California's gas tax. The governor proposed just last month the gas tax. I went through that bill and I actually saw some blank parts in that. And there was not a specific rebate amount in that bill or the ceiling amount for eligible vehicles. Why is it that there's not really a clear cut when it comes to this bill that a lot of Californians are really anticipating?
Well, there's 120 legislators and a governor, and together we negotiate and we get to the finish line. And so I think that he's leaving a clue out there of the items that we need to negotiate. What's the dollar amount and who is eligible? I am a co-author of a bill that would give $400 back to all drivers for their cars out there. And that also becomes a starting point for negotiations as we're looking at how to give some relief to individuals at the pump out there. We're working fast. The budget is due June 15th, and we expect to have a solution and those blank spots that you're talking about figured out.
Yahoo Finance's Dani Romero alongside California State Assembly member Cristina Garcia. Thanks so much for that conversation. Appreciate it.
A shareholder is suing Elon Musk in a proposed class action lawsuit for failing to disclose his major stake in the social media company. An SEC filing last week showed Musk taking a 9.2% stake in the firm, but the lawsuit claims that disclosure came too late, causing significant losses for investors. Let's bring in Jake Walker. He's attorney for that shareholder suing Elon Musk and Block 1110 LLP partner. We've also got our very own Alexis Keenan joining in on the conversation. Jake, it's good to talk to you today. Lay out the claim for me.
Sure. It's really straightforward, and it is that the laws apply to everyone, including Elon Musk. There's an obligation to report to shareholders when you go above 5% ownership in a company, and you have 10 days to do it. And Musk failed to do that. He let 6 additional trading days go on before he disclosed that he had taken this ownership stake in Twitter. And when he finally did disclose it, of course, the Twitter shares were up $10 a share, over 25%. So with that, he obtained an unfair advantage against common public shareholders by failing to make this disclosure. And we are trying to remedy that unfairness by suing on behalf of those people who sold during those 6 days, many of whom sold their shares to Elon Musk, who paid less than he otherwise would have if he had just followed the law.
Jake, it's Alexis here. Now, your lawsuit, it goes after Musk individually. So damages, if the plaintiffs prevail here, they would come out of his pocket. So what is the range of damages at this early stage that you anticipate, given both this potential size of the class of plaintiffs, as well as the volume of alleged losing trades?
Here's what we know, Alexis. About 56 million shares were sold during those 6 days. Some of those may have been sold and repurchased, so not all of those shares may be damaged. But we know 15 million of those 56 million shares were sold to Musk. So at a minimum, he profited $150 million against the backs of common shareholders. And the damages are likely significantly higher than that. It's not just those who sold to him, it's those who sold at all during that time period who lost money. So I think damages are well north of $150 million. They're, certainly 250, 300, potentially $400 million.
Now, another kind of avenue that isn't necessarily touching your case is that Musk has now filed as an active investor after filing late as a passive investor. Now, if the judge okays this case to move forward, is there any way that the judge can then strip him of that activist role?
Certainly not as part of this case. This case really is seeking to recover on behalf of the investors who sold during that window. And so it's pretty narrow in that regard. I would think that the SEC is looking at the issues, not just about the late disclosure, but also about his decision to file first in the form that indicated that he was not an active investor, and then quickly thereafter changing that. And I'm sure the SEC will be looking at that. They're really the outfit that has the ability to go after that decision and look at that and penalize him for that if it was improper in any way.
The tough part of your case here, of course, is intent. In this case, for an investor fraud case, it would require that the plaintiffs here prove that Musk acted by his filings either recklessly or negligently. So what are you expecting Musk to say to combat that? Does he have a defense here?
Look, the first battle for us will be to convince a court that we're able to plead that he acted either intentionally or recklessly. I think we can do that just from the profit motive. I mean, I know he's a wealthy man. I know he's the wealthiest man in the world. But there's lots of good case law that indicates that, even if you've got a lot of money, saving yourself $150 million is significant. And it certainly goes to his motive.
Jacob, it's Brian Chung here. I wonder if there's any degree of all of this that's also looped into Elon defining himself as an active or passive investor, because that was a big point of debate as well in filing. I don't need to go into the nuances here, the 13D versus the 13G. He originally identified himself as a passive investor and then joined the board, and then just kidding, he wasn't. Is that also giving some investors that are interested in this suit a little bit of confusion and desire for remedy as well?
Yeah, I'm sure it is. I mean, our case is really specific. And the fact is that once he disclosed the stake, initially when he disclosed it, he indicated he was not active, but it didn't matter. It was absolutely material to shareholders. And we can see that because of the way that Twitter's stock jumped. It went up over $10 a share, over 25%, even with him not disclosing his active intent. He very quickly, changed that filing and said that he'd be active. There was then obviously the drama with joining the board. Our case really doesn't get into that. I think that, again, is more an issue on the SEC side, but I think it's certainly drawn a lot of interest on behalf of shareholders. We're really looking to say that what he did to people who sold their shares during that time where he was buying but didn't tell when he was supposed to, those are the people who have been damaged in our case that we're looking to recover from. And, he's not above the law. He had an obligation to file that report, within 10 days of going above 5%. He just didn't do it. And he had a good reason not to do it. He saved himself a lot of money by not doing it. So that's the wrongdoing we're going after.
Yeah, and Yahoo Finance did, by the way, reach out for comment from his side of things. We haven't heard back, but a developing story for sure. Jacob Walker, attorney for the Twitter shareholders suing Elon Musk, and again, a partner at Block and Leviton LLP, alongside our very own Yahoo Finance's Alexis Keenan for that conversation. Thanks so much. Appreciate it.
The New York International Auto Show is back after its hiatus due to COVID. So what do some of the biggest brands in the world have to offer? Our auto and EV reporter Pras Subramanian joins us from the show now. Pras, what can you tell us?
Hey, Rachelle. Yeah, we're here at the New York Auto Show 2022 edition. I'm here with one of the stars of the show, the Nissan Ariya all-electric vehicle. And I'm here with this designer, Alfonso Albasia, Nissan's global head of design. Alfonso, so first time I'm seeing this car in the flesh. Tell me a bit more about this EV. It's your second EV, but it's pretty much your most important car, isn't it?
Very much. I mean, it symbolizes the next step for us, and really, in my 34-year experience, it was unique in the sense that at the very beginning, engineers were asking, like, where do you want major components? And that's like the promise of the new world, where you can literally move things around on this kind of magic carpet platform, skateboard, what I like to call it, magic carpet.
Yeah, I actually had a chance earlier this week to drive the Nissan Ariya here in New York City, in traffic, in some areas that were less populated. And I really was impressed by the fit and finish of the material. This is a near production model here. But I was surprised by, Nissan is is a traditional car that most people can afford to buy. It's not a higher aspirational model, but I found the Ariya to have those types of fit and finishes, and especially that glowing, the wood piece that actually had the haptic buttons within it. I love the fact that we have this movable center console. Tell me more about that, what your thoughts were behind the actual interior of this car.
Yeah, because when we figured out that by moving major components into the front of the car, that we had this amazing open space. And naturally, because we're a Japanese car company, you get these notions of Zen and all of this stuff. And at the same time, we were dreaming of this Japanese futurism.
Yeah.
And so we jumped on that. So how to express technology with a warmth, because Japanese modernism has a warmth. So that's why the wood, as you use, the wood, when you turn the car on, all the lights come through the wood.
Yeah.
And then, which is already nice, but then they become functional, so the wood becomes alive. It's not real wood, but anyway. And you mentioned this kind of more premium environment, because I think even in a minimalist environment, there's not a lot of things in there, but the way each thing plays a role in the totality, it was very carefully curated.
So Alfonso, you've been at Nissan for quite a long time now. You've seen many cars come and go. One of the cars that we're also seeing here, a refresh, is the new Nissan Leaf, which I noticed has some elements that are similar to the Ariya as well. The design language is very similar. Talk to us about that car and what you were trying to achieve with that design and the purpose for that car.
I mean, the Leaf obviously is the ambassador for us. It's the most brave thing that we probably have done in the entire history of Nissan. To a world that didn't have EVs and no charging stations, by the way, to not only make a car, but to also start relationships with cities to encourage them to create infrastructure. And yes, it's been going on for a long time, and then we knew Ariya is coming. And even though, like you said, it's a mild refresh, but a few touches to make alignment with its big brother or sister, Ariya. So the front end became much simpler, it became more of a black tech shield like this, and because it's still essential for us. It's one of the least expensive cars to own. And I'm not talking MSRP, I mean just I'm alive, I'm using my car every day, and why is my wallet not being drained by the experience? And the Leaf really is the master. Ariya as well, EVs are, living with an EV is once you set your things up, is effortless.
So one last question, back to the Ariya. It's a very highly anticipated car for the brand. We had heard that they're going to delay its release a little bit because of the fact that there's component shortages that are affecting the entire industry. As a designer, what can you do or is there anything you can do to actually alleviate these, this acute problem happening in the industry right now? How do you make that work so this car comes out sooner, if you can?
Sooner sometimes is more difficult, but we can help the company understand some possibilities. So in our capacities to visualize, because we are the ones creating the data, we talk about chips all the time, but like you said, the component screens, unicorns, basically, they're also in really a tough situation. So we're doing a lot of work where we're making a car without a screen, and instead of waiting to make a prototype, we're getting into goggles and we're showing the head of planning of, okay, maybe not so bad. Oh, and the customer loves the car, maybe we go. And this kind of relationship is how we're living in the company. It's not just, dreaming of the future, but helping the today.
So Alfonso, you're not really global head of design, maybe global problem solver as well with troubleshooting with the cars and brands here at Nissan. Alfonso Albasia, thank you so much.
Thank you.
Back over to you guys.
Thanks.
All right, Yahoo Finance's own Pras Subramanian jamming away at Javits on the automotive beat. We appreciate the updates right there from the International Auto Show floor. Weds to be are filling 2022 with reservations, forming what is set to be the perfect storm for wedding planners, guests, event sites, and services. Joining us now with the Outlook is Esther Lee, who is the senior editor and wedding expert over at The Knot. Esther, great to have you here with us. This year, it's going to be wild.
Thank you so much for having me.
That's absolutely, that's the best way to describe it. So first and foremost, for all of the planning that is now being pushed into this year, what are the figures? What's the headline number that we're expecting for total weddings to take place?
So yes, I love this number. There's going to be 2.6 million weddings in 2020 alone. For context, there's typically 2.2 on average in the US year over year. And so what you're going to be seeing is a huge and massive lift this year alone in weddings across the board.
How are they different, Esther, from pre-pandemic in terms of cost, in terms of people attending?
Yes. So typically the average cost of a wedding in the US is $34,000, according to our updated stats as well. That's right on par with those pre-pandemic numbers. So what we are seeing is now a return to what weddings looked like, back in 2019 and 2018. However, people are more excited than ever now to attend weddings because they've been cooped up at home for such a long time. So finally, I can say this with great pleasure, is that this year weddings are back and they're more joyful than ever.
So the newlyweds to be might be ready, and you also have the guests who might be ready. What about the vendors? How are they dealing with this when they still have supply chain issues, they have inflation? How is that all figuring into this?
There is a lot going on right now, and weddings are also impacted, of course, by some of the inflation and supply chain issues. What we have found, though, with wedding vendors overall is that because they're constantly faced with a series of challenges during COVID, they're incredibly resilient and they're also very solution oriented. And so what we're seeing is that they're prepared for what's ahead. If you don't have roses, for example, in the inventory right now because of some cost delays or some delays in shipping, instead they're finding baby's breath as a backup option. And couples are quite in fact loving it because they're finding out new inventive ways to showcase their dream designs.
Are there more or less destination weddings? I mean, travel prices right now, we do know, are elevated, to say the least.
Yes. So we are seeing that those destination wedding numbers are also right on par with those pre-pandemic numbers. People are super excited to travel, of course. And as you had mentioned earlier, with Delta and all of this going on, people are getting on those flights, they're traveling worldwide. And we are seeing that, there is an uptick in guests who are attending destination weddings too.
I can't help but wonder how many thousands of weddings had to be canceled because people had to stay home together and realize, I don't like that person that much. But I'm not going to ask you about that. There's probably not data to support it. But working from home, people have expected to dress casual everywhere, including return to the office. Are we seeing more casual clothing, Lululemon-like weddings? And what about gifts? Have they evolved? Is it more along the lines of straight cash, homie, given inflation?
Great questions. So first and foremost, one of the biggest wedding trends we've seen actually is experiential wedding registries. So at the Not Registry store, for example, couples can register for experiences now for their honeymoons, for their future homes. And those are very popular because people have actually had the home items from, during being cooped up at home, having to cook and everything else. So we are seeing that as one of the trends. And also I hope to someday maybe see a Lululemon wedding, wedding attire, because that would be really comfortable and fun for the dance floor. But yeah, people are excited to dress up again. It's a little bit more casual than usual, but still that dress code, they're going to look good this summer and fall.
Now, I want to talk priorities because usually at the wedding, someone's like, look, it has to be either an excellent open bar or the food has to be amazing. How have people's budget priorities changed in terms of what's most important to them?
Yes. So for couples, what we're seeing is that, the average cost per guest is actually going up because they've realized that they want to give their guests some very special experiences. I think being at home and having us reevaluate our priorities has made us think more about our loved ones and how to curate the best in class experiences for them at weddings. From the guest perspective too, we're actually seeing that they're willing to spend more, and there is an uptick and a surge in guest spend because they're willing to travel, they're willing to book those hotels. And it's right on par with what's happening economically right now too. And so they're spending, and it's going to be a really exciting fall and summer ahead again.
How have we seen, just pre-pandemic Delta to now, the wedding planning process just change? And what are the biggest trends that we're going to see continue to move forward even after the pandemic?
Yes. So one of my favorite wedding trends of 2022 is this notion of values-oriented planning. People have just been through so much together. And so because of this, they're reevaluating their priorities, and couples are leading with their values first. They're hiring vendors who reflect, what they believe in, and they're putting their money where their mouth is. And so there's that. And the planning process will continue in that regard. They're also putting guest experiences first. So they're really leaning into wedding websites and educating their guests on what to expect from the week and getting them amped up and excited. For example, I know a couple that share their full itinerary of first date spots and like favorites places in the city, so that their guests could also enjoy it as well. And the wedding website is a great place to leverage that information.
Well, I don't have any invitations, so if anybody needs a guest at their wedding, I need to add some on the calendar. Esther Lee, the Knot senior editor and wedding expert. Great to have you here.
Let's check in on the state of the alcohol industry with Pernod Ricard, North America's CEO, and Mukherjee. Yahoo Finance's Brooke De Palma is here as well, and always great to get some time with you. We're really getting some good reads on travel demand around the world. I know that's a key business for your business and then the liquor industry more broadly. What are you seeing through that prism of travel?
Listen, it's coming back. People are ready to kind of live again, and we're seeing travel pick up. More importantly, we're seeing people come back to restaurants and bars, and we've seen a great resurgence, and we hope it continues.
And also too. Go ahead, Jared.
Oh, sorry, I didn't mean to interrupt you there, Brooke. But I just wanted to ask you, as we return to the office, as we return to our normal lives, things aren't really going back to normal. Just wondering what kind of trends you've noticed that you think are here to stay over the last 2 years.
Yeah, when it comes to coming back to the office, I think, people have figured out, look, I need to be purposeful when I come back. So just don't ask me to come back for the sake of coming back. If you want me to come back just to be at a computer, I can do that from home. I got probably better Wi-Fi. Instead, what people are asking for is, if you want me to come back to the office, let's make it really meaningful. And so I can interchange, I can collaborate, I can do ideas. So the number one thing that I think workers are asking for is flexibility. And it's a new way of working. And we've proven to ourselves that we can be just as productive being in our homes. But I do think it's important to come out of the homes, because isolation is not a good thing for business. You need people to think about ideas and think outside of the box, and you do that in person.
And over the past 2 years, really most recently, we've seen so many major headwinds hitting consumers. We've had supply chain strain, we've had inflation. Are you passing along pricing to consumers?
Yeah, look, this supply chain situation is hitting everybody. It is structural, it is global. There are some things that are more short term. So I think people have to think about business innovation around the supply chain situation. We're doing it. And there are some real hard increases in input costs. And again, we're seeing some pricing actions across not only our business, but the entire industry. Right now, consumers, again, they're voting with their wallets. We're seeing a lot of premiumization in this category. And so the price increases, consumers are willing to understand. And right now, we're only passing on those things that we think are real cost increases, but we're watching it very, very carefully.
And something else that consumers are starting to understand is the uptick of espresso martinis that we're seeing out and about at the bars. Break down for us. You have Kahlua underneath your portfolio. Is that making a comeback?
Absolutely. We saw that comeback actually even within COVID, as we saw a lot of in-home cocktail making. And I think a lot of people were drinking chocolate and espresso martinis. And, with brands like Absolut and Kahlua, that works really well in our favor. And what we're seeing now is people enjoyed them at home, and now they want to enjoy them in the restaurant. So we're seeing a real resurgence of that cocktail among many other cocktails coming back. And that's really great for our portfolio when we have such a wide portfolio of brands that are great for cocktail making.
And another way you're looking to reach consumers is in the metaverse. You're actually launching Absolut's Coachella activation on Decentraland. So I want you to explain exactly how that activation works and why you chose that platform. I mean, we have Roblox, we have Meta's Horizon World. So why on Decentraland?
Listen, we really wanted to partner with Decentraland, and we made that purchase because I think they follow a lot of our values around responsibility. And it was important for us to partner with someone that really matched our values of what we call conviviality, bringing people together in safe ways. And we're excited about this because this is the first ever platform where we can actually allow real life to meet virtual life. And so we are literally recreating the Coachella experience in Absolute Land. People who are at Coachella can actually enter the metaverse, recreating the actual experience that you would have at Coachella. And we are bringing fashion and music and cocktail making, even to the point where if you're in Absolute Land, we have a vending machine where you can actually order the cocktail to be delivered to your home. So it is a one-of-a-kind experience. Let me tell you, why are we doing it? Because consumers want you to go where they are. And I hate to date myself, but think way back to websites and the internet. We didn't know what we were doing then. This is the next evolution of how consumers want to live. And so if we're not experimenting early, and we do it with Absolute because it's a brand that brings people together, this is our real intent of learning as we go, and we're very excited about it.
And before we let you go, I remember talking to you back in your PepsiCo days. You have a really phenomenal story. Talk to us a little bit about your journey. How did you end up in this role?
Yeah, I will tell you, I'm the first ever outside hire at Pernod Ricard to be a CEO. And I'll tell you, Brian, I just think more and more CEOs need to come from marketing backgrounds. We live in a world of disruption. And if you don't disrupt your total business system to be demand-centric, you will be pretty much out of business. We've seen it over and over again. So your ability to entirely change your entire business operating system to understand where consumers are going, where shoppers are going, take this, Coachella metaverse thing that we're doing. Look, that involves everything from IT to supply chain, and you've got to be able to wire your entire business around where demand is going. So more and more CEOs coming from marketing backgrounds really enable companies to think about how they can avoid being disrupted.
All right, we'll leave it there for now. Pernod Ricard, North America CEO, and Mukherjee, thank you so much. Good to see you as always, and good to see you too. Yahoo Finance's Brooke DePalma.
As part of our Taxes Made Simple series presented by TaxAct, if you were bagging some tendies off of AMC or GME, it's likely the case you're going to have to let the IRS know, in addition to the Reddit threads themselves. Rocco Carrero is Wealth Partners founder and private wealth advisor who's been looking into the proper way to be reporting these things. Rocco, a simple question here. Let's say you made some money on Robinhood off of those meme stocks in 2021. How do you report that as you're in the final days of filing for the season?
Well, most financial institutions would be sending you out some type of a 1099 document that you would have received sometime late January up through the middle of March. But even if you didn't receive that information from the financial institution, it's still your responsibility to reach out to the financial institution where you do have your assets and make sure you get that documentation, because you are still going to be responsible for the taxes should you have made some gains.
All right, but that means that you would have had to sell your holdings. So let's say, for example, you're still holding, you don't have to report it, right?
Yeah, if you're still holding those holdings that you've had some gains with, but you haven't sold them, you don't. But if you own a security that happens to be paying a dividend, you could be responsible for the income that security is being generated for you.
Okay, how about the people that didn't get income because they lost a bunch of money because they bought at the top and then they sold at the bottom?
That's another great point. People that were messing around with, trying to speculate on certain securities and ended up by losing money, they should receive those tax forms as well. If you have a loss, you want to be able to either use that loss against your gains, or you want to, if you have no losses to offset, if you have no gains to offset your losses with, you want to be able to carry those forward on your tax return for the future. Whether you get a income tax deduction as a result of it, or if you could offset your future gains against your losses. Really good point.
How do you do that if you want to carry it forward? Because is that something that the basic tax software can allow you to do? That sounds a little advanced.
Yeah, I believe the basic tax software program would allow you to do that. However, what we always suggest is that people do consult and work with a qualified tax advisor just to make sure they're doing everything correctly. That's usually a good rule of thumb. Because again, if you make a mistake through using some type of a software program, and you said, well, I really didn't understand it, you are still responsible for the penalties and the interest that's associated with the gain or the loss.
And running out of time, right? April 18th, I believe, is the final date here.
That's correct. Unless you file an extension, which a lot of people seem to be doing. We've been pretty lucky over the past few years by having the tax deadlines extended due to COVID. But this year, I guess it's required to be on time.
All right, well, I've got mine done already, so at least I'm good on that front. Rocco Carrero, Wealth Partners founder and private wealth advisor. Thanks so much